went through transfer pricing. We did a question on it. We did a question on how you could be asked on to determine the transfer price, and we did a question where they could ask you just to prepare a statement to evaluate the performance. Most likely, those are the nature of questions. And then apart from that, the theoretical issue, they could ask you, of course, the theoretical issues, which of course you already went and did and shared some notes here and there. So commonly they would ask, what is the transfer price that would be determined on maybe on certain size. They may be supplying division or maybe the receiving division. And another time they could ask, if they charge this transfer pricing, show the statements of how it will be in form of presenting the divisional performances. So that is the more commonly what they do set. Other than that, the theory issues, and that's it. You check that and you notice that. So we can go through non-financial. Non-financial is short, as I said. Now, again, I shared the Excel. I said if you need also to do maybe further references, there is, of course, for those who maybe didn't get the rule properly, you could check again. There is the Kaplan book, which has also those rules stipulated. Apart from what I gave, you could do maybe further references where you could get also more insight into that. So that is how it is. That's how it is. So if there is no question, you would I would want to go to non-financial, and then probably I'll focus on budgets, because after I finish non-financials, I don't think there is anything on that other extended area that is necessary for me to try to deal with, because the non-financials are simply some explanation here and there, and then we catch up with those cases. So if there's no question, we can move on. Okay. So we can move on to non-financial. Now, non-financial mostly are where there is little to do with the formulas. It is just strategically try to explain. As you may check, like this is in reference to Kaplan and also Pentuition, they could explain to you what are those elements of non-financial. Now, some of them cut across. Some of them cut across in different topics. Those who are doing strategic, there are also those things there of BCG, microportals model, and all that. So somehow, despite whatever we do here, we know also they are cut across in other areas on theoretical basis which relate to that. So that is a non-financial. The common one, this one, there is a non-financial performances, which if you check, the Kaplan gives you like a table relating to that. The non-financials which are here, you could check. Just a minute. Let me check. So again, these are called non-financial performance indicators. Now, I don't want to use Kaplan because it has a lot of stories. It is for reference. I'd prefer to use a Pentuition because of time, interest, and it kind of gets to the point quickly. But if you check, if you have like the Kaplan publisher, there is insight and details that you may need for those who feel like maybe want to explore more, because the non-financials are also represented in that, in some page there, maybe page 415 and something. There is a chapter called non-financial. It immediately starts after we finished the issue of transfer pricing. If you check before it, it was issues of what we are doing, the ratios, what we have gone through all that. So I hope nobody has a question on divisional performances. If there is, it's just to explore more on what it is that you may want to maybe come across and deal with. So anyway, if you check that, you'll use it for your own references. But as for now, if we go back to this one is still open. I think I was doing reporting. I did not close. Some of the data here. Just a minute. So anyway, this is what I'll use here. So the non-financial performance basically means there is little to do with the formulas. It's more like qualitative issues or things which are checked. Now, as we have been looking through financial performances, we started with the ratios. I remember the first time we did a question on ratios. We went through all that. Now, non-financial performances, we have this one here, which is called Fezigard and Moonblock. Fezigard and yes.
Could you share for us that Kaplan book?
You don't have it? I didn't. I did not share it, or you don't have it.
You don't share the Kaplan.
Okay, I'll share after class. I'll share that later on. Anyway, there is a non-financial. We have physical and moon blocks. This one here, basically, it focuses on performances, mission, services, businesses, and they should be, of course, organization needed. The measures, the dimension of performances that should be measured, and standards. There is a key performance limiting, key performance indicators need to be capable of ownership. As you may check, it is, they say it mostly used in services businesses, and it does focus on measures of dimensions of performances, KPIs, which is key performance indicators, to be capable of ownership, i.e. the person responsible feels able to influence the measure and should be achievable. So we have that. Rewards, of course, should be provided should be clear, provide motivation and controllable to that case. So what do they check? Which are those non-financials? They check quality. Quality, quality is something we don't, when we do financials, we don't, we don't really could view it, but the non-financials will come and assess that, like quality, warranty claim, satisfactions, customer satisfaction survey, are a customer happy, customer number of growth, returns volumes, repeat businesses, internet page visits. All those are data collected to just make sure you get the information clearly down. So that is internet placement in independent surveys and the rest of those. So then there is a speed of response to customers' queries, how quick telephone are answered, number of products launched each year, students' success rates in training, patients cured in maybe hospitals, vaccines administered, waiting times for appointments. All those things are a part of what they assess. And as you may notice, this they more are in qualitative in nature. They check if all these things are factored in. So in short, qualitative and quantitative should work together. You just don't check the quantitative part and leave the qualitative. So this is what they provide. They check all that. How many customers are visiting? How are we responding to the phone calls? Are customers satisfied? Are are people getting enough attention? Is the customer care really providing the best that it could be doing? Is, of course, is the customer growth, is it being factored in, and all those cases. Of course, to some extent, of course, there is calculations involved in that, but mostly the good percentage of what they do is qualitative. They check why. If the growth is not there, why? And then they go to why and realize there is maybe things of quality and qualitative, and they could easily get that. So that's what they do mostly in the service industry, and that's what it is. Now, there is nothing much for me to talk about here. I think most of the theories issues is easily we can discuss, disagree, and agree, because they are up for how we understand the English conversation or the English context of whatever it is. But at the bottom line is, we all could agree that the explanations are, of course, talking about the same objective, which is they are trying to achieve a performance issue, which is, of course, in form of whatever they are dealing for that case. So they have given, even for examples, success of school, that they will be soon dependence on people or on the people catchment area. So when assessing a surgeon, it will be the best way, the best will be as assigned to the most difficult operations, so might have lower success rates than less talent colleagues. So repeat business will be difficult to assess for major purchases. How often do you expect someone to buy a new washing machine? It is a capital in nature. You can't be buying washing machine every time and there. So, however, it is important to, of course, make an effort to assess non-financial performance, because as noted above, good performance in service and quality will usually underpin the good performance. So you need to check all that. We are not just about calculating only. Now, the performance area, we check for financials, performances, which I said will be, of course, a mix of a little bit of calculation, but a good percentage is more of qualitative. Eh? So don't think they don't really calculate or they don't really go into that. They just pursue further and they try to understand why. They don't stop on, when they say non-financial, it means they don't stop on the figures. They pursue what is the case there. So there is financial issues related to that, competitive performances. You know, financial, we check, of course, the things we know: profitability, sales growth, return on investment, cash flow and liquidity, EVAs, sales growth will be on under competitive, proportion of contracts won, customer assessment, market measures, quality, rejects and reworks, customers' complaints, that is under quality, claims for compensation, peer review assessment, and as I say, flexibility, spare capacity, time to deliver, setup time, percentage of work declined, and all those cases will be factored in as they look into the innovation. Do we have new products brought in the market, patents and files, research and development spendings, and all that. Now, as I said, more likely there is no really calculations as such, but the calculations are part of this, because even if there is they work together. In short, they should work together. So don't think they are independent. It's just that one focuses on more financial and another one focuses on more qualitative. That is the idea, more qualitative. Maybe 80% is, 90% is qualitative, while the other or non-financial, while the other one, 90% is financial. So this one, I think you can read on your own, which is about fizzle and moon blocks, which is also something you may get to get an overview for that. As I said, I'll give you the plan for further review, because as you may notice, the open tuition would kind of summarize. If you need maybe to explore maybe the details, you could check other versions of the books you may want to. But if there's kind of no question on that, I'd wish to go to this. There is a question which I've seen, because as I said, I'd want to clear with that and then focus on budgets. If I could do budgets, then I'd focus on variances in the classes and focus on this, because variance has three things I need to cover: the basic, the advanced, and the planning and operation issues. So let's focus on another form of measure, is the balance scorecard. Now, balance scorecard is not limited here, it's also covered across other units in the CPA or any other courses. The balance scorecard, which is a Kaplan and not on balance scorecard, it usually have 4 perspectives that are kind of factored in. You know, it reviews the business in 4 perspectives, as you see there, as what it is said, and aims to establish the goals. Yes, please. Yes.
I don't know how easy it is. For example, sometimes it's a bit difficult to get such a kinds of series from those case studies. If it would be possible, if you can get like one case study, even if we don't do the whole thing, but we just go through the case study and then we pick like those non-financial performance indicators. I think it would help, because sometimes it's a bit difficult to extract that information from the case study.
Yeah. Okay. We have an example would be the balance scorecard. Has a question there. I don't know if there is there's also other strategic, management issues like business engineering, which is also covered across the board and all the cases, the microportals and all those cases. Some of them are easily covered in this. I think most of you may be doing, I don't know if you do strategic, but or either way covered in some other course related to that. So we'll check. Of course, we'll go through the past papers as usual and try to uncover, because at the end of this, we always end up checking with the past paper first before we move to something else. So we'll check it. Don't worry about it. We'll check that, and we'll try to check as we'll try to check and then see, because after this we're going to the past paper and try to assess what we could do. So anyway, the balance scorecard does the 4 perspective, as I said, is hopefully no, it is not the first time you are encountering this. So it has the 4 perspective. One is the financial perspective, the customer perspective, the internal business perspective, the learning, the innovation and learning perspective. Those are the 4 categories that it tries to pursue. So one is the financial perspective. Now, the name have all the meanings to what they're talking about here. When they talk financial perspective, those are 2 words put together. Of course, it means how you view, how is it being viewed in form of financial? That is financial perspective, which of course, when it goes to financial, you are checking those parameters which measure financials. One of them, of course, the biggest one is profitability, sales growth, return on investments, and cash flow, cash flow and liquidity. Those are things which they check there. Customer perspective. How is the customer viewing? This is kind of a third party point of view, because customer is a third party point of view. So you want to view how the customers is in that terms of customer. What do exist and potential customer value from us? So you will check things which are measuring that element. One of them is percentage of sales from new customers. Are customers growing? And are we delivering a percentage on delivery on time? Are we delivering as expected? And number 3 is a percentage of orders from inquiries. Is it increasing, decreasing? You would notice that could be also an indicator of how performance are viewing your business. Customer survey analysis. You see how the customers are rating, and that is how it is. Internal business perspective. What process must we excel to achieve our customer and our financial objectives? So, that is more like, within us. So you check the unit cost analysis, you check the process and the cycle time, you check the value analysis, and you check the efficiency. Is our values, is our chain, our value of our, chain supply, is it really analyzed, and is it working properly? The cycle time, are we able to provide and do things on better basis? Value analysis, are we adding value as the business internally? Are we adding value to the business? And the efficiency, are we doing things in efficiency, or we are just wasting resources? Are people idling too many hours, or we are at least using the hours that are engaged effectively? Those are the things. Innovation is always a future strategic issue. So is the business, you must set aside, you must give people room to breathe and room to think and room to learn. And that's why I've always said a business that doesn't give you growth is almost like not really making you give it the best you can. So you must also grow. And when you grow, of course, that is through learning and becoming. When you become innovative, that is through what you give to the company. So how can we continue to improve and create future values? Number of products. You must give employees thoughts, and that they must have room for thinking and time to market for the new products. So those are the 4 perspectives, which somebody would, if you want to get more like in terms of whatever they're the ones which you may also understand. We will when we go through whatever we go through in a balanced scorecard, that's what we go through and check. Unless there's anybody with a question on it. If there is no question, examiner has set actually a question on the balanced scorecard. Before we go to the pyramid and stuff like that, there is a question which has been set.
Excuse me.
What?
Excuse me.
Yes,
How
please.
can a requirement? Excuse me, sir.
Yes, I'm getting you. I get you.
How can a question be formulated on this balanced scorecard?
Of course, they ask theoretically. They could ask, analyze the 4 perspective that the case study has, which of course you have to talk about them. Or they could ask you in numerical, and they could tell you, could you analyze this using the balanced scorecard in form of what it is? But on your question, a question would require practical scenarios. If you are asking how, then that means the best way for me to answer that question would be if I'll take you back to a past paper and you see how the balance scorecard could be factored in. Now, there are questions, if you skip through the paper, you'd find there is a balance scorecard. There is scorecard, which is there. There is balance scorecard, which is there. Maybe you could check that, because that is what I was actually building to, because I was saying there are questions which have been set. So since you have a question, then there are questions which you may notice. This is one. They ask you, assess the suitability of using balance scorecard. Of course, you have to talk about the balance scorecard as the 4 perspective, which could be measuring financial, as you have seen. They could measure customer perspective. They could measure, of course, internal business perspective, and they could measure also what we call this other one, which is called innovation and learning perspective. And you have to talk about that, but of course, you have to have read. You don't talk about them like you are talking about them without connecting to the case study. Of course, at the first, you have to introduce them like independently, but you have to simulate into the case study, and that's what you need to do. So like this, the suitability will be that it will give you the 4 perspective being scrutinized, and that is the case that you may want to talk about. Which are those? Financially, you may have to explain, because they are asking you assess the suitability. It's not a calculation issue. Basically, it is to promote and talk about how the balance scorecard can be effectively be used in this case. And it can be used, as you may notice, anytime a business has those 4 perspectives being fixed in or being realized, there's no business that can miss those 4 perspectives, because financial is always there. Customers that are there, if you're doing business, of course, you are doing because of customers. And then, of course, internal, business perspective is within you, which is, of course, is there as a factor. You need to check that. And of course, you have to look at the future, and the future needs learning and innovativeness to keep up with the trends of whatever is changing. But, like I said, we don't want to, write theoretical issues. That one we can write later and send to somebody who may need that, because it will take some time to deal with that. So you have to connect it. Now, there was somebody who was asking, how do you connect to this? Of course, when you read like a case study, the case study is business oriented. And being that is business oriented, you could all see that. As I've said, anytime you're reading a case study, there's a breakdown of concepts. So you must know all those cases. And that's the best way to do this, because there's no way a case study can be talking about things which are not there. It is, of course, aligning and is a business oriented. So it is, of course, touching on those or pinpointing on those things that are related to this. Now, like this, you may notice like this was set in in April. Probably if you check in April, you notice the question there, which was on balance scorecard, which was among the compulsory question. It carried 9 marks of all that was set there, which somebody needs to talk about all those perspectives as per the balance scorecard. Like I said, we don't have so much time, so I may not want to go and read this, but you could say there are all those cases. There is the shareholders, employees, customers. This paragraph is giving you all those things. They're talking about the shareholders, talking about employees, which will be on internal perspective, and of course the learning issues. Customers, of course, we will get that, and the suppliers will also be factored in. So all this, we will, how the relation is, will give you that. Financials that are all here, you could check the sales growth and all those cases. So now that's not the only question. Even in, although I have searched, but it's not coming through. If you check March 2022, there was a question on balance scorecard, which is, of course, what you need to look into and see. Let me check where it is. I don't remember the page. Now you have seen an example how they ask. It's not the only question. The other one, I think, is not coming through. I think it is only that. Let me check March, because I know there is a question in March 2022. So March 2022, there was a question. But in March 2022, it was about calculation. A little bit of calculation, of course, with the explanations. More explanation with the less calculations. Like I said, they have to work together in form of that. I think it is this one here. I don't know when I search it, it is not coming, but no, not this. I think it was question number 4. It's not this. I don't see it, but there was a question which was tested. Let me search again, but I think it is a case study, which was, no, this is August. I think I needed March, yes. March 2022. It was not in compulsory area, but it was in section B. So I was searching a wrong paper here. They asked the students to kind of analyze, okay, it is it this one? No, this is about something else. I think it's this one here. This is the balance scorecard, which they were asking students at that point. Starting from this paragraph here, it connected to the balance scorecard, and it is asked down here. So if you check, that's what they tested for the students to deal with. But here you needed a little bit of calculation to explain, because they say it suggests and calculate performance indicators that could be used for each of the 4 perspectives on the balance scorecard. And that's what they asked the students to deal with. So anybody asking how they set it, that's how they do. That is another example for that.
Which paper is that?
March 2022. You can check it. Yes. So you have seen it? So if you have seen it, I think we can do that. We can do this because, as I said, the non-financials are not really, some of you can read on your own and get up and then and catch up with them. And I don't think it's really complicated. It's just you need to talk more when it comes to non-financial, more than calculating. And that means you must understand the concept better for you to talk about it, you know, in your own way. So like this was set in March 2022. So the required, as you have seen, is in the required one is taking 8 marks, is in section B. Is in section B. Is in section B, which relates to that issue. Although also this one is assess the performances, but this one required people to, and then analyze and comment on the non-financial performances of GP saloons, saloon businesses under the headings of quality and resource. This is to analyze and comment. So they needed, of course, also the non-financial here to be talked about, as in case of that. So the whole of the question generally rotated around, or was predominantly focusing on non-financial, meaning even if you are to start from the top here, it is still a non-financial element. If you check from the top here, it is still a non-financial element from that area. But because I'm on balance scorecard, I'll kind of also deal with this other part, because they need you to explain non-financial issues. It is a saloon which was being operated, but they need you to explain non-financial, which thing means you'll check things like non-financial cases and talk about them. But before you talk about non-financial, of course, most of the time you have to also factor in financial cases. So the balance scorecard would start from here. Based on this one is not the balance scorecard element. The 4 perspectives are starting from GP, this core paragraph, introducing kind of another element. I think for whoever was asking, when you were asking about how to distinguish this, you cannot distinguish or break down a case study if you don't have the background of the concepts being tested. So like in this case, it's easy for me to notice that from this point, they're introducing, a paragraph could be introducing a concept, or a paragraph could be explaining another additional issue to whatever you're already reading. So like in this case, I would easily notice that this one is stopping here, and this is bringing this as a new, as an additional factor, which is talking about under the balance scorecard. And also, since I know the balance scorecard is usually focused on the 4 perspective, I could easily see the details. There is things like sales, there is units, there is hours, there is all those, and development costs. So I'd easily predict that the balance scorecard is focused on mainly on these cases here. It is because, as you may see, they are trying to cross-check between the development cost, which is of course perspective of the customer perspective, the innovation and learning, and then there is units or cost of units, which is of course the internal issues, sales issues, which is financial performances, units produced, which could be of course relating to also the issues of perspective of how the internal business performing, hours worked. This could be efficiency. That is of course internal issues, which are how they are using the resources. As for that case, so that is the case which is relating to this. Now, if we read the question, I'll read from here. As I said, for exam, of course, you must read fast before you know how to cluster it or separate it. But of course, this is not the first time I'm reading that. So I already know that it is classified at that point. I already know it is classified at that point. Of course, for the exam, you can't presume. You must also go through to analyze which part of what is coming from what point. So GP has also been running a small production company that has been producing telephone in Rwanda. Recently, due to economic downturn as a result of pandemic, the performance has not been good, and therefore he launched a new version of product. Development work continues to add a related product to the production list. The following details are given for the first quarter. So there is details, there's development cost, there's existing, the development cost is said there, existing product, new product, existing product, which is also given there. And also there is as you may say, there is a new product. hours worked, there is existing product, and new, of course, product, which is, of course, related to that. Now, GP has heard about the performance evaluation using financial and non-financial measures. Recently, he also attended a workshop and heard about the balance scorecard, and has approached you as an expert for advice. So you need to give the expert advice for the 8 marks to get before you go through that. So the arrangement will show you that from the required, we need this paragraph to solve these 8 marks or to get these 8 marks, because it suggests and calculate the performance indicators that would be used for each of the 4 perspectives on the balance scorecard for GP's production company for the first quarter. So you may notice that in this context, if you go back, I tried to have it in the Excel. I don't know which Excel I copied in, but I could check. I think I have various Excels opened. Let me check which one it is. Maybe it's this one here, the BS. So it's here. I got it. I think it's this one here. So I copied it here. Now we can go through that quickly just to make sure that you have an idea. So required is that we need to have these factored in, and of course explain the perspective involved in that, or of the 4 perspectives in the balance scorecard. Now, if you may check again, you may notice if you go to that slide here, there is the financial perspective, which is involving these. So financial perspective involves those, which is what we need to check through. The financial perspective involves profitability growth and sales growth, and all those cases, return on investment in that cases. So you have to check that and see. And this is, of course, what we need to do and find out. Right? So I could make the 4 perspective. 4 perspective. So we have that, which we need to, of course, explain in form of that. I think perspective is like these 4 perspectives that we need here. Let's make a column maybe for that. So we have the measures. The measures are these ones here. So those are what we check. So these are indicators or the measures that we may check there. And one of them is you need to check the profitability analysis, but you check as per related data. So I mean, it's not necessarily all of them should be there. So like in this case, I would check, if you may check in terms of what we have for that case, I could easily check the cost per unit and see how it is from that. Just a minute. And this will assist me to cross-check the other issues related to that. There is sales. So sales is there. Which component can we check there? Sales. Because I'm checking what I can check here. Do I have profitability? No. But I have sales. And I think units growth, that will go somewhere else. So according to this, I have sales growth, which I can check. So my 4 perspective, which is, of course, to check the financial first, financial perspective. Financial perspective is that I could check the sales. I could check the sales. I could check the sales growth. The sales growth. Maybe if you could bring this here. So I could check the sales growth. Now, the sales growth, there is a existing, and there is also, we need to check the new, and it is here. So currently, the sales growth, as you may get the data, we have the data, which is, of course, as you may see there. So that is the data of the sales revenue, which could indicate whether there is a growth or something like we may analyze and able to comment further on it. So we may check that. Those are the components we have on the sales growth. Given data is that. So let's check and see. Is it growing or is it like reducing from the new and the existing? So there is existing. Existing is that. So if you check the existing, you could easily also comment on that and be able to check what it is. But so the sales growth is that. We can easily, there is also cost unit. We can use also cost unit to get the gross profit. So the intention is we also have something of this nature. Let me paste properly. Okay, it refuses. I could just decide to paste it the way it is. So this is the case here. So we also have other values given. We also have, in this context, we also have, this is a unit cost. So I've noticed from this case, we can easily calculate even the profitability issues. Because if we have unit cost and we have sales, we can easily use that. Actually, this is sales. Let me call it as it is. This is sales revenue, not growth. Sales revenue for that. But we can measure growth. So what am I going to measure? Here, I'll put the measure later. Let me put the measures here. So the measures, I could measure from these two components. You may notice, let me see the other ones, units produced. That one could be internally how they are working hard, that could measure efficiency and usage of resources and other things. So it could be an internal perspective, if I may relate it to that. Hours worked could be efficiency cases, which could be internal business perspective. So the measure is this for financial basis. Let's check this and try to find out. So if you check, we have, as you may notice, in this case, we could get profitability analysis. It's possible for us to do profitability analysis in terms of what we have. And even we can check growth. So let's start with profitability from that scenario, which is the first one there. Now, profitability is that from the existing, you notice that we have the profitability issue. The profitability here is, you may check, there is a the sales of 110, subtract this, and you, of course, get what would be the profit for that case. Now, this profit, so this gives us profit for the measure, but we want to know, did it increase between the existing and the new? So that's the profit element. Similarly, for the new, we have that. For the new, we have that. We could easily check and see, is it profit or what? We have 25 and we have 24, no, 14, sorry. So you have that, which is also the profit element for the existing for that case. So if you check again, now we have, those are the profit, but we need to compare and get more details of whatever it is. Did this profit grow? So let's get the margins and see. Let's get the margins and see. So the margin here in relating to this is this divided by the sales value, which is, of course, is around 30 something in percentage ways. You could easily say it could be 32 for that case. Then the other one is, of course, this divided by the sales value, which is 25.
Sorry, sir.
Yes.
Question, sir. How
Yes,
did you get these numbers? How did you get this profit?
In the table, this is the table. We have cost of units produced, and we have sales. We have this. This can give you profit, is it? Because what is profit? Profit is the difference between cost and the sales. So I could analyze financial perspective like that. So how did I get these figures? They are given, all of them. If you check, I just picked them from where they are. Like this one here, I picked it exactly, it is here. Even the 25, I picked it exactly, it is here. Although I copy pasted, this is also exactly as it is there. And this one is exactly as it is there. So they're given. Then, of course, this is the cost. The other one is the sales. Of course, in Faranga. So when you subtract, you get those, is the existing profit will be that, this minus that, and this minus this one. Then the margins are this. They made a margin of that. And if you want to compare, you will notice that the new existing will bring even more profit, and you will comment in that perception of the financial issues. Unless there's anybody with a question, if there isn't, that's how it is. Okay. If there's no question, we can go to the customer perspective. Let me follow this order here. So customer perspective, we can check that. Now in customer perspective, we are going to check if any of that existed. But again, even before I go to customer perspective, there are other things which I could measure here. There are other things which I could measure in this context. Like I could measure the other factors that I may need. I could measure, sales growth, like what it will bring for that, what it is from that scenario, and all those cases. But it depends with the data given. So the data given is can easily go with profit. So I went with profit for that. So it depends again with the data given. So not all of them are subject for measure, but they are only subject, but they are optional to what you are given. So like here, we're given that, so profitability could easily be assessed. Now, if you go to the customer, to the customer perspective, you may find also that being an issue. Customer perspective. Now, customer perspective, these are the components would easily check as indicators. Okay.
Sorry,
Now,
sir.
yes, please.
After getting this profit, there is no need to calculate the profitability ratios. Like by taking the profit over sales to get the profit margin or gross margin. There is no need to calculate that ratio.
Gross margin.
Yes.
We have already margin here. We have that. Remember, you can calculate anything you want as long as it works. Remember that. You can calculate anything, and I don't mean anything that is out of the, okay, mostly you can calculate anything that could make sense according to what you are measuring. Like here, we are checking that it's possible for us to calculate profitability ratio. So there's no need of calculating others. But again, I've said it depends with the data given. Like from the data given, it is easy for us to measure profitability for the case given here. So you can explore others as long as you can always have enough data to do that. Like what you're talking about, is it calculatable? Let's ask ourselves. Is it possible to calculate based on the data given? Is it possible? The data given is this. Is it possible to calculate those that you're talking about? If it is not, then you have to calculate what you can calculate from it and try to support, try to explain the data, try to explain, things that come from it as such. So anyway, that is what I would say. Again, it depends with what you are given. If you want to explore more, no really problem. So from financial perspective, we have done that. We can go to customer perspective. Now, customer perspective, based on the data given again, what can I measure? Let's check here. I can measure the customers, the percentage of new customers, because we have something called new and something called existing. It is possible for me to measure new customers. If you check, it's possible for me to measure that. Here, it was possible for me to measure profitability as per the data given, which I did. So it is possible for me to measure profitability. While here, it is easily, you could see, I could measure this based on the data. I don't have delivery timing issues. I don't have the number of orders issues. I don't have customer survey, but I have new and existing. And that means I can measure percentage of whether we are getting new customers will increase or not. So we could easily, check that and see the percentage that are growing from because of the new customers. How? If you check, there is a 25. There is 25, which is the sales, and then there is 110. So 25, of course, is a result of the customers we get as new. And that means I could easily measure that from this. So what are my indicators that I could use? I'd use the sales as again. I'll use actually this, that is here, this here. I could use that. Let me just copy paste it down here. That is my indicator that I'm going to use. How? I will come here and of course check and see. what they could give me. So my issue is what am I measuring? Here I was measuring profitability. That was my indicator. Here I am measuring this element here. I am measuring percentage of sales for new ones. How do I do that? There's a growth formula we could use, which is of course where the increase is 25, divided by where it is, the where it was originally from, or the overall, which you could divide by, let's see what percentage it is representing. The percentage would be 110, this one here, plus the 25 to see what is the overall percentage of those that increase. So it increased by 19, kind of, and if you percentage it, that is what it should be for that case. So to check that and see how it is from where it is. So it shows the new customers will be that. The new customers will be relating to what they are having there, which is from that case. Let me see. How about if you calculate simply this from the old existing, it will give you 27. So 27 will be also, 27 could be like overall the new, because this one is including exclusively the new, may have been 23%. So anyway, I was just checking, like what is 25% of what is existing today, where we are today is 23%. But what is the percentage of the overall? The percentage of the overall sales that increased is that. But this is the incremental. Customers increased from the previous. They have increased by the growth. Actually, you could call it growth or incremental. Growth is also a name, overall name, but we could say this is the growth. So the growth percentage would be 23. And the customer we got from the previous, they represent 23 of the previous, which is the case. Anyway, that's the only thing I could measure. I've said these ones are not really possible because based on the data I have, I could not factor in those properly. Now, if that is done, I go to the next. The next is this. Let's go to the internal business perspective. And what we check in here, we're going to check all these. We're going to check all these. We check unit cost analysis. Remember, analysis means you can analyze. If it's not, of course, you check for another one. Then we check for the cycle or process time. Then we check for value analysis and check for efficiency. And if you come back to the Excel we're having here, our next agenda is to check what is called internal business perspective. Internal business, I think it was 2 marks, because I said there's 8 marks, internal business perspective. So that's what we have for that case. We need to check that. So I need to check that, and for me to check that, I need to, of course, enlist what it carries. It carries these components to assist you to check for that. Unit, cost analysis, and the rest of those. So again, what are our issues would be these 4 headers or 3 headers we've created. What are the indicators and all those cases? So let's check that. The intention is to check this internal perspective, which is a internal business perspective that you may need to check. So let's check here. Do you have unit cost analysis? Is it possible to do unit cost analysis? Not really. But because the cost given here is not per unit, it is although there's cost of units produced, we can do an analysis. Is some of option. I think we can focus on that also. It has several things we may do. We can do this because there is cost. I've seen it, so it's possible for these things. So this one is possible. This one here is possible. And process cycle time, we have it already. There is time issue, which is hours worked and stuff like that. We could check productivity and check the efficiency, how they are in form of that, because this could give us also the efficiency from the information we have. And we have that value analysis could also be, maybe we could check and see if it's possible, but I can see it's possible to calculate around two of them or three, if we could easily connect to that. So we could check unit cost analysis and see how much it is, and see whether the units cost under existing is affordable, or it has increased, something like that. So to do that, we can come here and check, and this is what we'll use. We'll use, of course, if you want to check here, we already pasted here. I could pick it from here. Is this one here? I'm going to use that to check the unit cost analysis and see which is my indicator of what I want to measure. And I think from that point, I could easily use it for that. So sorry for that. I think there is some issue here which is bringing a problem. I could paste here.
Sorry, sir.
Yes.
Yes, I want to ask why you know how to use that unit produced.
No, I've not ignored. In fact, it is what I want to use now.
Okay.
It is what I want to use now, because I'm supposed to do unit cost analysis. So I'm going to use that. It's only my Excel has hanged up, but I'm supposed to use that.
I want to know if you can pick that one, or if it is your option to use that will have above one, or we can use this unit produced.
We can use, of course, because we want to do what is called this part here, which is unit cost analysis. So basically, it means I'm supposed to get like an average of per unit, or what is the cost per unit, and then I apply that and see how it will work. So that's what I wanted to paste here, but I don't know what is happening to that Excel issue. Let me see. What is it doing like that? Let me see. There is something happening to my Excel that I don't know why it is doing like that. Just a minute. Oh. So the Excel, okay, now it's working. I think there was some formula, something I had done wrong. So it is here.
That's right.
This, I'll pick this. This is the unit cost. I'll pick that from that angle. Is the one that I'm going to use, which I highlighted in yellow. I've highlighted in yellow what I want to do, or the things that I intend to do. And one of them is that unit cost analysis. And to do unit cost analysis, I may need to apply the cost per unit. So what I'm measuring here is this one here, unit cost analysis. And to do that, I'll have to take this 75 divided by the number of units produced under existing, which will give me 150. That is the cost per unit. I'll also take this, divide by that, and this will give me 140. So it analyzes. It shows you, because you'll have to probably, you have to comment on that basis. It tells you that, as you may check into that, you would notice that from that angle, that the unit cost under the existing was a bit higher by difference of 10. Because those are the comments you need to make. There's a difference of 10, and that difference of 10 is that this became a little bit cheaper. Maybe they did evaluation, they did value analysis and they reduced some things, or maybe they did, whatever they could do to make sure they get the best of that. Now, anyway, that's it for that. Then there's another issue we could measure also. We could measure hours for efficiency, because efficiency is about input-output analysis, and a better way to do that, you could use that, which we could say would want to measure efficiency. So to measure efficiency, I could use this, or process time, because I think it can also give the same data for that case. So I'm going to use hours worked. Just a minute. Hours worked. So I'm going to use, what am I using? I'll use these hours worked. And to use hours worked, I have the existing, and when you run down, I have also the one which are the new product. So when you check through, you notice the cost, the hours are that, and the hours are these. So again, I could also check and see how is the efficiency being realized here. Now, when you check, efficiency is about input output. So it affects how you are doing your product. We could also call this efficiency or productivity assessment, because efficiency measures how productive it is. It is also how efficient you are. How efficient are you? So this could be only measured against what you are producing, because that is what is the main agenda of the business. We could take this, which is the hours out there are being used. This is the number of hours. And of course, we divide by, of course, the related figures that we have for that case, and get how is the unit per hour being used. So we could use that. So let's get number of hours spent on a unit, or maybe how many units are produced. Let's use productivity. So we could do either way. Either talk about the hours, because hours is also a resource, or talk about the output. The output is the number of units. So you could check this in two perspectives. The perspective here we are checking is about efficiency. So you could check from how it is being on output basis. You could check on output basis. Output meaning how is the units being, how many units are produced in form of hours, which could take this and divide by the number of hours in terms of existing for that scenario, which we give this. I think I should have put, that is the output. And similarly for the other one, that is for the new one, I could pick, of course, how many units are being produced, which could take this and divide by that and find the produce for. This could be, let me put the header here. This could be on output analysis basis. I could check that and get what is my efficiency, which will be because the 500 I'm producing divided by the number of hours under existing. I want to maintain the same line. And of course, this one here would be these 100 divided by these, which gives you, no, I picked the wrong 100. The 100 should be this one here, and then divide by these, you get 4. So that's how they spend, of course. In this context, it is units that are being produced per hour. That's the case. Now, for the input will be how the hours have been consumed, which you could do. You could check efficiency on both sides, input-output relationship. You could check maybe vice versa, the reciprocal, which could be this, of course, divided by the number of units. And you see, we use those units, hours used to cover the units. So it depends again, no really problem about that. The issue is just understanding what it could be from that point of view. And that could be also something that somebody could use for his own way. So the hours used, of course, are that. Anyway, that's how it is. You could check from that, the input way, how the resource, which is hours. We don't have materials, so this is a usage, how the usage is done on how the hours that are being used from that. Because this is units per hour, but how are hours being used? And that's it for that. So we have tested the two. Unless there's any question, if there isn't, then we can move ahead. Okay, let me go to the last part, which is I think we have tested 3. The last part before we move to something else is the innovation and the learning perspective. Now, that one can also be factored in. The measures that can easily indicate that are those ones there. So again, if you come here, you will notice that for innovation, and you know, learning perspective, innovation and learning perspective. So innovation and learning perspective, as you may check again, we could easily, what are the things which could be used to indicate that? One of them is the number of new products introduced, of course, and time to market for the new products. So that is probably what we may check as the last component of this, and then we decide whether it is making sense from that. Now, for new products to be made, there must be development, and people must be given resources to do that. That's why in department there is research and development. That is would assist you to benchmark yourself on how the new products are developed. So again, this perspective here, if you analyze it, it will be like, if you check again, this is on innovation, and that the indicators again will be only the research and development here. How much is research and development efficiently or giving us some outcome for it? So we'll check into that. And basically it means in this context, we are trying to see the number of products introduced in relation to that money that is being used for that. Now, when you check, they spent 9 point something, which is this figure here, 9.5. So the question is, how do we cross-check these? So they spent that, but again, if you were to check again, what has this money given us? This money has given us some increase in sales. So we have to check and see by what percentage and compare with this, and compare with the profitability, and maybe we can explain. The new products that came in, they increased the sales, and the sales have increased to 135. So it means if there is any measure you are doing, you will pick the 9.5, measure it against the income it is bringing. Now, the income it is bringing is the sales. The sales here, it is this plus this introduction of D1. You find what percentage is able to be financed and be able to bring this. So it gives in 7%. And 7%, of course, as you may notice, it introduces a growth in a new existing, which is 44, which you could compare with that and do comparative, intercomparatives, and the rest of that, and make some analysis from that. Now, unless there is any question, that is the last perspective, and you could now comment on those in many ways as you may wish, but don't forget it's only 4 marks, so you have to also be strategically move ahead to other issues. Question?
Yes, excuse me.
Yes.
The question I have, can we use the balance scorecard to measure, for example, the performance of a like a divisional manager?
A divisional manager?
Yes.
You know, again, if you're doing on a divisional level, and you need to check, it may not work, you know, to some divisions. It may work to some, but not to some. For example, if you are to check, you know, there are other things which you may check, which could be there, which may not be in that department. For example, if the department which is a production department, you may check, of course, how they're using hours and all that. So it may be used if the variables are there or the related issue are there, but it can be used. Let's say on good percentage, it can be used, because a divisional, especially if it's a divisional which has been given you know, the autonomy or the power to sell, then it has financial performances, like we saw in transfer pricing. If it has you know, that power, then there is sales involved in it. If it has also this, you know, the issue relating to innovation, how innovative is that department is, have they improved the products or something like that, and learning, it could be done with that, because you know, each department, that's why we take a department to learn. I think even at your job or some jobs, they say this department of finance is missing financial skills. Then that means is a learning and innovativeness they are trying to build up. And I think that's what even most companies do around here. They sponsor CPA. That is basically trying to look at that perspective of learning and innovation. They want the employees to empower themselves in that department of finance. So it does work. It does work. When you think about it, it does work, because, you know, a department may have people in accounting or people in IT who are not qualified, or okay, who have some skills, or there's a new skill which has come up in the market and they need to catch up with it. So of course the company would send them for training and to catch up with that, is it? So it does. To a wider extent, it is applied. we use it. You know, they send employees to go and train. They allocate money for the employees to do it, to have skills to innovate. They in various departments. They of course analyze the supplies and the you know the when it comes to customer, if it is not exposed to the external customer, then that could be where the customer perspective may be limited a bit. But some of those, maybe not entirely all the four, but a good extent, 3/4 are of course related to that. Yes. I divided. Somebody asked how I got to 150, and I divided. I will add the formula probably later, but generally, if I could put even that, it is merely what I did. I took what was this figure here. If you check, I did that. I took the figures that were relating to that, which is of course the 500. Was it 500? The cells. The cells were this 110, and I used it. It is not able to carry, but I divided it. I divided it. If you check properly, you notice I picked 150. Is it 150 or this figure here? I picked 110, and then I divided with the number of units produced. Is it 110? No, I picked, is it this cells? Yes. I divided with the number of units being produced there, and the number of units being produced was 500. I think I did wrong. Let me check inside. Yeah, no, I picked that, and I divided with the
5 million divided by 500 because you're looking for the cost, not sales.
Yeah, it's true. So that's how I did it with it, and I got the cost per unit. It's cost per unit. It's not sales. You're correct. So I picked the 75 and divided by that, which is, if you know, check inside, it is the one which is this and that, and the rest. So anyway, if there is no question on that, that's one of the questions which was set on balance scorecard, among others. And I think there are other measures that you know, I haven't seen them being tested as often as I said, but you have to know there are other measures which are there, which are non-financials, and they are easily understandable. I don't think they require much. Like there is a performance of pyramid checking, you know, the corporate ladder, or of course operational issues. I don't think it is something you may need to, you have a challenge about it, and it is what it is for that case. Value for money, you can read all that. We already did transfer pricing. So generally, the rest is as I said, there is a, you know, there are things which you know, the unit you are doing works together with others. So it works together with the leadership and all that, governance issues. So things of governance and the rest are also cut across. They are tested mostly in the in corporate finance, not in leader in strategics, leadership and the rest. So which we can always cover there. So non-financials are there. There's balance scorecard. There's July, which we checked and we noticed it was only asking how to explain accessibility. And there is this one here. So I don't, from the two questions, we did this, which is that one. But as I said, there are also other theoretical questions which cut across. Like you notice there is a, even one time they ask, although in our syllabus we don't cover that here, but there's the BCG. They ask this. So you must read also those across, those who are doing strategic and all those cases, or you have done it somewhere else. Like they ask, it's around financial issues, which are also not really directly connected to what we cover in the syllabus, but of course affecting the unit called strategic performances. So, you know, that's what it is. Others, majority are theoretical, because as I'm saying this, I'm trying to move out of there. That's what I'm trying to like wrap it up. Unless there's anybody who has a question relating to that, the non-financial performances questions are always also part of the theory issues. And being part of the theories, there are a bunch of them which somebody should try to answer and start with, maybe to make the pen warm up before you go to calculations issues. Maybe if you find such, they are open as long as the concept is you get it, then you can always answer it. So I don't have any question on it, and I don't have anything to add on it. I wanted to go to budgets, because we've done all the performances, unless there is anything left out. Because always, I can't guarantee 100, but I can guarantee we have 90-something% of those areas that are relevant to this. Yes.
Excuse me, sir.
Yes.
Just probably maybe in 5 minutes, you can tell us about the BPR, because it's also most examinable part. Business process engineering. Business process engineering is also most examinable. Actually, almost like every year.
Okay. There is a business process engineering. This is an analysis that takes place when there is when you want to change the company from one's the state of the company today to another formation. We usually in business engineering, we check as it is and check the gaps, and then advise on how to change the gaps. So you check, there are 3 things we check, or we come up with in the report of business engineering, because this is like three or 2 words put together, business engineering. And in that context, it means business engineering is basically you are trying to come up with other ways of handling it. We're coming with ways of handling it, which is called business engineering. So what are the 3 concepts we cover in business engineering? What are the 3 things we cover in business engineering? We cover, of course, we analyze business as it is today, and then find the gaps. We analyze business as it is today. After that, we find what are the gaps. Those gaps that are in the company, of course, we compare, we benchmark with other businesses that have similar issues and are performing better. We don't benchmark, of course, with the worst performers. We benchmark with, of course, the best performance in terms of what it is. So immediately you benchmark there, you could easily advise and relate to that. Now, I had a kind of a slide which kind of explains those issues. I don't know which question you have maybe in particular, but generally in the slide which I have, it tried to explain the cases that relates to what business engineering or how it could be carried across. Now, it's a concept where you analyze business and find the gaps. Like I could analyze maybe WASAC and check that WASAC has the gaps. Maybe they don't do proper billing or something like that, or they delayed the billings, and therefore the collection is not really properly done. And I advise how they could come up with the ways of dealing with that. So that's basically what could make what could be making what called business engineering. So you find in what it is today as it is, and then you analyze and get what are the gaps. The gaps, of course, are after you find the weaknesses. And those weaknesses are the ones which you recommend and how to fix them. And that's how what business engineering is. But let me share with you like a slide, maybe somewhere. I have a slide which I think I was explaining something about that some time back. Maybe I could easily skim through. I was checking where I stored it, and maybe I could maybe try to get that. So you see business engineering, maybe this one here. This is a business engineering structured approach to improve business process. That's what it is. In today's fast-paced and ever-changes world, engineering is essential to remain competitive. So you want a company to remain competitive. So what is the definition of business engineering? Is the examination and the designing of business process to achieve significant improvement in cost, quality, service, and speed. So you see those. Like I said, those are the issues you are trying to fix. So you analyze as it is today. Maybe I check a department of IT and I find how it is working today. For me to analyze what are the gaps and then those gaps, of course, it means I have to have more knowledge from how the other businesses which are believed to be better off are performing. So why it matters, business engineering is essential to keep up with the rapid changes in business environment. Companies that do not engage in engineering risk being left behind. Change is inevitable. You don't change, you find you are losing and you are left behind. And even that's how life it is. Even ourselves, we do business, we do engineering on ourselves. Every time, like for us who are professional, you check what is new, what has come up. You want to remain relevant at all levels, is it? So that's also you are engineering yourself and finding what are your gaps. It starts with also like you and as an individual. You engineer every time yourself. You say that I need to add CPA paper maybe to make sure I be competitive in this level or whatever level. So that's the engineering you are doing. You find that I am having this, but there are gaps. And those gaps are, of course, the ones that you intend to figure out and find what it is. So those gaps are the ones that you fix in and you find what it is. It starts with as simple as yourself. Every year, why do you do resolutions? You do resolutions. I think, there is when you're enjoying, is it the banana and whatever? Everybody has like resolutions. The resolutions are always to try to create improvement in your life. And that's also what business needs. So there is how does it, who does it? Here it is who does it? A cross-functional team that includes managers, employees, and outside expert is typically responsible for conducting business engineering. So of course you work together with the insiders who are managers, employees, and incorporating in expertise to give view on that in terms of it. Steps in business engineering. Identify why do we need this? Because again, you need to do cost-benefit analysis because sometimes you may engage an expert and it is something not worthy. So some things are not worthy to engineer every now and then. So it has to be worthy, meaning that you have to identify the need for change. Do I need to change really? Maybe I don't need to change. I'm just okay, or the change doesn't bring anything that is beneficial. So you would easily stop at the first steps. Second step, of course, you analyze the current process and the systems, as I was talking about this. You analyze what is the current process. You would check, like if it's a business, you have to check and define what are the gaps. And you could use the balance scorecard and the other factors and the other issues which can analyze that. So analysis is based on parameters. You may use balance scorecard. You may use the Fizzle and the Moon blocks. You may use all those value-based business management. You could use all those parameters that you have been going through as a basis of analyzing. So organization must evaluate the existing procedures and system to understand how they work. So you have to go and write down. So before you do the engineering, like in a case study, you have to analyze how is this business doing today. And that means you have to check the case study, break it down on how it is doing, and develop as it is today. We call it as it is. That is how it is operating today. If it is a supply, if it is a water company, maybe you have to know how the water is processed, how it goes through the chain, how it goes to the customers, and how the billing is done, how the billing is followed up, and how they handle the defaulters, and how, all those cases it is, and how they handle default in connections, and how they handle untapped markets, which have no water in terms of that, is it? If it's WASAC, you are doing engineering, you will check all those gaps. You may assign somebody, if you are experts, you are a consultant, you could assign somebody to handle maybe project under, there's a project several run by WASAC, like is it called UCI or something like that? Those projects being run, there are projects there is urban water, there is what waters, all those projects. So you analyze and see each department, like procurement department, human resource department, do they hire people who are qualified, and all those cases. So you analyze, and that is what is business engineering will be. Do they hire qualified people? If not, the why, how they should improve that in the employee section, or why is it that the business is having those issues? Maybe they hire incompetent people, or they have poor engineers, or they don't have strategic people. So redesign and streamline the process, and the new processes and the system must be created that streamline the business. Of course, as you find the gaps, you come to resolutions of how to fix the gap. Implement the changes and monitor the progress. So of course, you just don't say do this and then you're done. You have to, of course, keep a checkup of whatever is happening. So just as it is, that is what it is. So benefits of business engineering, as you may see, it increases efficiency and productivity, cost savings, because you will check and notice those gaps and fix the gaps. And the gaps is fixing because it saves you money, because those gaps are loopholes for wastages, and there are loopholes for inefficiencies, and there are loopholes for incompetency, and there are loopholes for all those issues that are not good for the company. So once you fix to the was the good, of course, cost comes in as a savings, and of course, improve customer satisfaction and competitive advantage. As I said, if you don't do that, you may be left behind. And even all of us do engineering every year. At every bonane, everybody does engineering to see what at the end of the year, what you've achieved, and you engineer what I need to do in the next, and it will save you. It will increase your productivity, save you some things, improve how you relate, improve your edge in terms of other things. Challenges and consideration, resistance to change. Of course, people don't like it, because when you're engineer, you will find the gaps, and the gaps, of course, are accountable to people, and the people may not want to be accountable because it will be subject them to trainings, and all those people don't. Some people don't like training; they like the status quo. So engineering often meet with resistance from employees who are uncomfortable with change, and thus effective communication and training are necessary to kind of make them be part of this. Ensure employee buy-in and cooperate. All those cases. Organizational culture. Culture is one of the worst thing, or one of the good thing, or whichever it is. It can be worse. A culture can be worse or good. There is something I studied about. There is a Peter Drucker. Some guy is known for writing some business principle. He said culture. They said that strategy eats culture for breakfast. If you have ever seen that, strategy eats culture for breakfast. What he meant that is that culture, if you have even a strategy and culture is not good in that country where you are, is very difficult for you to achieve what you want, because culture is something which has existed for many, many years. Before people change their mindset, it takes another century to change people's mindset. So organization culture can also be an impediment to what it is. Okay, somebody is saying we can continue with budget while we are still fresh. Okay, no problem. So I'm about to finish employee training and support and all those cases. Now, so case studies, Burger King, IBM, Zonarex, Ford Motors have been part of their engineering on international level. Conclusion, business engineering involves systematic approach to identify inefficiencies and, of course, redesigning process to achieve significant cost savings and increase efficiencies and improve customer satisfaction through careful planning, effective communication, ongoing employee support. Organization can also successfully engineer their business to stay ahead of competition from that case. So good. I think that's the case. I've tried to explain the business engineering. Unless there is anybody with a question, And business engineering, I always start to reflect something in a simple version, which would be like, how does it like apply in my life? Business engineering is what we do every day, and not every day. Every periodical time we go through our life, we always do business engineering from that case. So anyway, as you may notice, probably that case. So as you may notice, we have the rest of the other issues, as I said, governance issues cut across. There are topics which are cutting across. So even if you cover them, while in other cases like governance, if you find governance, ethics issues are also part of what could extend on strategic, because we are talking about management. Management involves all those issues, governance, ethics, all those. You could cover them from other related units from that case. Now, I wanted to go through budgets, as budget is the next issue which I need to give an introduction. And the budgets, of course, as you may know, is also covered in an intermediate level. So whatever we are doing here, some of them you may have an idea, and the rest. So my strategy would be maybe, for those who are in Kigali, maybe you will let me know. But we still have one lesson from the schedule. We still have one lesson to deal with what we need to deal with. And as I said last time in the class, it may not be practically possible to use one lesson and they say you'll do whatever is remaining. It's impossible. And even the reality is that unless I come in and I try to teach myself, which is always not the case, you have to teach the students. So as I said, you'll have to find a way. We need to maybe do the budget somehow. And some students suggest we can do online. So we can start with budgets from my issue. And then, of course, if we meet in the next class, maybe we carry on with the variances. Because variances, we have 3 things to cover under variance. Of course, you have to start with the basic, then extend to advanced, and then from there, focus on what is called planning and operation variances, which would be the last part of whatever we'll be covering, to meet with what we are doing also online, and probably call it a semester for that case. So there are questions on budgets. You could see them. This is a list of them on Excel here. I don't know if you're on Excel, but this is a budget. It is December. There's something on incremental. There is a zero-based budget. Some of them, most of these are theoretical issues. They asked on that. Rolling budget was calculation. This is theoretical. This is theoretical. Rolling budget was calculation. Flexible is a little bit of arithmetic issues. This is between rolling and and the other budget, which you call incremental, and then there is zero-based budget, which is also related to that. Hopefully, maybe I've not analyzed last sitting, but I didn't see any budget there. But that's it for that case. So those are questions on budgets. The ABB budget is also set, but some years back. So ABB budget has been set, but some years back, because the scope of analysis are used is since they changed the syllabus, or they reviewed, not change exactly, but reviewed from that case. So we can go to budgets if there is no question. So for the budgets, let's try to give it a shot. We will see where it takes us. We can easily start with some issues about the budgets, explain. I think budget is not new to you. It's, of course, not new to whatever we are dealing with here. So we have types of budgets. We have what a budget can assist to. A budget basically is a plan which is quantified from the forthcoming for what is coming ahead. There are ways of making a budget. You may use imposed budget, participatory budget. Participatory budget means you allow people to participate in. Imposed means you sit down 2 to 3 people in management and you say, follow this, and those could be way of budget. There is negotiated budget where you agree. All those are systematic ways of coming up with a budget. So budget being a planning tool, we use it for planning. It has estimation inside because any plan is estimated or has elements of estimation inside it. So we'll also cover something called quantitative techniques in budgeting, which will deal with the high-lows, will deal with regression, and they will also focus on the question which are there as per the past paper and in terms of dealing with it. So a budget is a planning tool. I think, you know, a budget is very important. Even at our home, you budget. Anybody who is not budgeting is very difficult to, of course, do accountability. A budget starts as simple as home. You buy things and say this will manage for the week, this will manage for that. You buy cash power, you all that. So it ensures achievement of the organization objectives. It assures you stick to the plan. It communicates ideas and coordinate activities, and it provides, of course, you know, establishing control system, and of course it motivates to improve employee performances because they have something they are working towards. So we have what is called fixed and the flexible budgets. Now, I'd prefer first of all to, because based on the questions, let me start with the budget that is a little bit simpler. Maybe I could start with the rolling budget because as I see the time, I think I don't want, because the question I need to do in the past paper on the rolling budget is easier maybe than other budgets like ABC budget. So let me explain rolling budgets, because rolling budget is just we multiply and they change it according to the factors. For the flexible and fixed budget, it may take, there's a question which we could attempt, which is in March. It could take some time, and it could go all the way to late hours. Strategically, let me start with some warm-ups, or what I see is relatively what could be a budget which could cheaply be handled, which is called rolling budget. So we have types of budgets. Commonly here, we will cover, like, if you check in the slide here, before we talked about this, we'll interact with this form of budgets. But strategically, I'm starting with rolling, just because as it's already 8, I prefer to choose something that is a little bit shorter and which could be done in the minutes to go through. So, but if you check here, we'll have to go through the zero-based budget. We'll have to explain rolling budget. We'll have to explain fixed and flexible budgets. All those budgets we will have to go through. From the question point of view, some of them are not really, you know, they are not like requiring you calculate. They require just explaining, and of course you may understand what they are. So we'll go through that. Zero-based it has no formula. It starts from zero, nothing. Rolling is the name have a meaning. I've always said it's always good to understand the concept by, of course, interpreting the words first. Like if you interpret rolling is something, there must be something, is a budget that is always changing. ABC is a budget extracted from a concept of the ABB, sorry, which means activity-based budget, is a budget extracted from ABC of ABC style, which is the activity-based scenario. So it focuses mainly on the, you notice the ABC will apply mainly on the overheads. Fixed and flexible go together, because fixed is a budget which is, of course, just to do an overview, fixed is a budget which is fixed in nature. It doesn't change. You just wake up and use it. You wake up and use it. But somebody came up with, is it possible to flex fixed? Because now fixed has that limitation of being fixed, and it is subjected to things which are changing. So he said, let's introduce another budget called flex. So flex is a fixed budget that is changed to suit activities that are being changed, is called a flexible budget. The meaning of flex, you know, flexing, you're flexing your muscle or something like that. So fixed, when a flexible budget is basically a budget which was fixed and has been flexed to adapt to the changes of level of activities. That is what it is. That's why they always seem to be together. Why? Because the flexible budget can only exist if fixed was already in existence. That is the case there. So just an overview of that. Incremental budget is a budget, as the name says, increase. So incremental budget is a budget that changes, traditionally, is a traditional approach to the budgeting known as incremental budgeting. The budget for the next financial year is based on actual results for the current financial year. At simplest level, a budget based on incremental costing approach is the actual or budgeted budget performance for the current year, adjusted with some factors which could change money. One of them is inflation and growth. Of course, it has disadvantages. Some people may lie there is growth and they use it to fix their money inside. So it leads to wastages and the orders, as you may check here, it may lead to kind of wastages and those cases, sorry. So that is what a flexible budget, an incremental budget could be. So it can lead to this, just let me admit somebody. So it may lead to that. It may lead to that, and that is what we could easily notice from that. So that's what it is. It could lead to that. So here it is. Now, we'll later on go into the details of fixed later on. But for the meantime, I think my slide is this one should be up there. So I'll change it later. Zero-based budget is a budget that starts from nowhere. I will go through that independently. ABB budget I've already explained. So which of course focuses on concept of ABC as it is adapting that. So what I want to focus on before we get tired or before it gets to 8 something there, let's focus on rolling budget and then deal with the rolling budget because it has a calculation. You can deal with it. Some students ask, what is the difference between rolling? Let's understand the difference between rolling and incremental. We'll understand it later. There is a question which is asked also to distinguish between the two. Now, rolling budget, as the name says, rolling. Rolling means, like a wheel of a vehicle. It is always picking the changes. So it is always on continuous change. Most times they use an interval of quarterly, to benchmark it against it. So it means it is always a budget which is continuously updated through the financial year. Adding a further period, say a month or a quarter, and removing the corresponding period that has just ended. So it is always uses the actual of the previous, like if quarter one has passed. So the actual, they will use it and use it as the next estimate to project the full year analysis. That's what rolling budget is. So the names have a meaning to all the budgets we are going through here. The budgets called rolling, the action is even rolling itself. Incremental, it is a budget which changes, of course. The difference is that rolling changes so much continuously. Incremental is after a prolonged period of time. So the difference is time interval. Continuous is more like frequently. Incremental is more like after a certain period, like 1 year. Actually, it is 1 year most times for that incremental. But this one is a shorter period. This one continuous is very shorter period that it's always subject to change. Then fixed, I've explained, it is a budget which is which doesn't change. Flexible is an adjustment done on the fixed budget subject to the level of activity changes. And then there is this other budget. ABB is a budget extracted or adapting the concept of activity-based costing system. And those have been set. Now, we have questions on rolling budget. As you have seen in the Excel here, I have made an analysis on the Excel showing you some questions which are related to that. Because as I said, it's a very practical area. Some of them so far have only been tested on theoretical basis. And I think some of them don't have formula. Like you don't expect to have a question on zero-based budget having where they need you to do a formula, because where there's a formula is where it is possible to set an arithmetic easily, because everybody will get you expect everybody to get the same answers. But zero-based budget is from scratch where nobody has any basis for that. So if there's no question, yes.
There is a question on zero-based budget.
Yes.
Maybe you can check April 2023.
Yes, there's a question, but like I said, we'll go through all one by one. Then I decided to start with the rolling. I don't mean there is no question. There's question. Even in the Excel which is there, there is question. But the structure of how we'll do things, we'll start with the zero-based budget. We'll start with the rolling. I want to start with the rolling first. Then next, I'll go to the fixed budget. Next, I go to the ABB budget. Then those that are a theory, we discuss. Because the rest are theoretical questions. Like that one you're talking about, zero-based. We need to go through, we'll go through zero-based budget in details later. In details later, as among the last budgets. Any theoretical issue, we'll leave for what? We can leave it for discussion, the last one. Because the zero-based is explaining only a concept, and it is that. And again, we'll go through that. So I want to start with the rolling first, and then I go to fixed, if time allows me. And then, of course, I go to the rest of the other issues, which are what I need to make sure we go through that. Eh? So we'll go through. Yes.
Now I'm not understanding where the rolling budget. If it is the normal budget and then you add another period, it means that you can take the normal budget and then you add this other month, or you update the month in between.
Basically, as a rolling budget, they wait for they plan, of course. They start first of all by a budget of all the year, either quarterly. Mostly it is quarterly. The interval is quarterly, because after 3 months, 3 months is always like a benchmark of what it could be. Eh? So then, in form of that, the rolling budget, there is now, after like 3 months, there will be an actual figures. There will be actual figures that have been realized. Eh? You will have actual figures that you have realized. Those actual figures are the one now which are used for projection of the next quarter, and it changes all that is there to the adjustment of what is changing the budgets that are the factors of changing. It may be maybe it is inflation, maybe it is growth. That's how it goes through that process.
Okay.
Now, if you want, like, maybe we have a question. The question will show you even, because the question you are asking also is kind of practical, and it could be easily be handled if we go through like a practical scenario. And that, I mean, we can easily check, even instead of going through maybe examples here and there. There is example, of course, in F5, which you could check, which is easy. Even I don't need to go through that, because the model of how it applies is very easy. It's very easy how it is subjected to. You only check what was last actual and change it to suit the changes that are projected to be realized or to be noticed from that. Eh? So, like, there is a question. Just as I don't know what happened to my Excel. My Excel, I don't know if it is closed or what. There's a summary which I was sharing here. Let me see. Is it this one here? I think there is something which happened to my Excel. Let me close this. It's not that. There was an Excel which I was sharing, it closed. So if you check, like in Excel, there are like 2 questions on rolling budget. So my Excel has kind of closed, which I had opened, which was having the topics and the summaries. Let me open again. I hope it is somewhere. How come it closed? Do not see it. Anyway, let me open it again, just because I had put some summaries here. I think my Excel happened, unfortunately, to have closed, which was why I was struggling, and it has closed and not saved some things which I had put here. But I'll find out later on what really happened from that issue. From that, I think there was unsaved. Let me do auto recovery today at latest. So there was a question, I think, as I was showing you, unfortunately, my Excel happened to have closed but I've gotten the one which is auto recovered. So let me use that one to maybe catch up with what I wanted to explain here. So there are questions, as somebody was asking, was telling me there is a question on a zero-based budget. They are there, but we'll deal with that later on. After we understand, I just gave an overview of all the budgets, but I will go through one by one, and of course, pinpoint the questions which are relating to that. So I'll do that later on when we go through one by one as we try to cover through that. So let me check. I think it's this one here, the one I auto recovered. I think this one. Yes. So if you check again in the topics, those questions are not limited there. They are there. Like I was saying, if you check like the budgets, I've summarized all of them here. The budgets are here. There is zero-based budget. There is this one actually 2 times. There is December, but more theoretical, and even this. So I said they are already there. But rolling has this and this, but they are the same. Typically, they're the same. There is one which is in April 2021. There's another one which is in August 2021. So we could pick one and use it as a demo. Either way, they are all similar. I never see anything, I didn't see anything unique about it. It was actually repeated. I think that examiner fell in love with that question during that time. He set it in August, and also they repeated it because it is this one here, which is the similar question that was set for that. I think it is, this is August, and also in April, the same question was kind of there. The August one is this, which is this one here. It starts from there, goes down, and they said, discuss the suitability of incremental budget, which will, of course, when we talk about incremental in details, we'll deal with that. And then recalculate the budget for division F using rolling budget and assess the use of rolling budget in F division. So you notice that's the question they set during that period. Now, not only that, also if you go to April 2021, there was a question. So the question are in August and April. August and April, there were 2 questions. That is the time when they did set 2 questions. And I think they did set the question, sorry. So one was set in April, another one was set in that period. So if you check, it is appeared in this section. This one is also a rolling budget. They asked the student to, of course, do the rolling budget for that. So this carried 11 marks. The other one carried, this carried 8 marks, sorry. The other one carried 11 marks. So the question was set, and it's there, as you may notice. Now, let's pick one and use it. We can pick one and use it from what it is. But the implication is the same. You see even the model is more or less the same. Even if you look at the F5, which is, the concept is introduced or is more land there, you notice is the same. There is nothing new to go or what you can get from it. Once you know the model, it is simply easy to use that. So I had hope my Excel, I was trying to copy one of them on my Excel so that I can use it. And I think I could calculate this one of 11 marks and leave that one of 8 marks for your own. Maybe you will notice there's no difference between that. So here the question is here. Now the question starts from this area here, because other than that, these are just kind of stories building up to what we're doing. And I don't think we have enough time to read all that, because these are connecting to other related areas. And having read this, so I know which area it is. So because I don't mean you don't just go and do it. You have to read, of course. I think in exam, they give you 15 minutes. 15 minutes is for reading and sorting issues out. So that is what you do. Is it 15 minutes or something? So you have that. Now, because of time of what we're doing here on the online, it is already 8, and I wish to kind of do this. So they recalculate the budget for division F using rolling budget and assess the use of rolling budget in division F. So the paragraph where this starts from, you could notice, even when you skim through, you'd notice the idea of rolling budget was introduced somewhere here, or the term rolling budget started to be mentioned as they go down here to the scale level here. So that's where the rolling budget was introduced as a factor from this case. They say the budgeting issue started from there. So I'll read only from this paragraph, and the others, there are more for other areas that you may want to go through. So it's August, I'm using 2021. At present, the DF, which was Director of Finance here, is harassed by introduction of a new information system with the Finance Department, which is strained the resource of the department within information system, with the Finance Department, which is strained the resource of the department. The board in the last meeting decided that the Finance Department should create and use marketing budget effectively at DG something, which is abbreviated there. I think if you check it is somewhere up here where they introduced DG at Duheze. Is it a group? Is a group, is a company which is called Duheze Group, which is related to that. So DG is related to that. DF there is the Director of Finance. So the DF has asked the management accountant at the group level to do some preliminary work to help her decide whether and how to change the budget methods. The first task that she believe would be useful is to consider the use of rolling budget. So rolling budget was introduced here. So anytime you have those 15 minutes they give you to peruse through, you should be able to highlight and find where each concept is being introduced in the case study. She thinks that the fast growing F division may prove the easiest division to introduce the new idea to. F incremental budget for the current year and actual results of quarter 1. So you'd see by design, they have given you actual results for quarter 1, which has just been completed is given below. The cost of sales and the distribution are a variable under the cost of sales and distributions are a variable. Administrative costs are fixed, meaning they are fixed in nature like that. So there is quarter 1, quarter 2, quarter 3 as per the budget, with the actual of quarter 1 highlighted here. So you have, these are the budgets. As you may notice, the particulars or the components involved is cost of sales, revenue, cost of sales, gross profit, distribution, admin, and operating, is it? Which is, of course, if you calculate, you'd notice it will give you that. On the basis of quarter 1 results, sales volume growth rate of 3% per quarter is now expected. The Director of Finance has also heard about bottom-up budgeting and has been wondering how it could be useful to DNG. Bottom-up means you start from the lowest employees, meaning from it is what the president was telling us in Kenya, bottom-up principle of working out, which is of course starting from catering for the low people at the bottom. Anyway, that is just for another day. So discuss the suitability of that we'll discuss as we go through incremental later. We'll go through one by one. So because for now, I'm presuming we haven't done that. So we'll deal with that in details and maybe come to explain that. That's the theoretical concept of what to say there. So recalculate this. Now, if we go back to the Excel, we could easily, I think I had, there's an Excel which I had tried to copy paste this. Probably it is this one here. Not really. There's one which did not save what I had done. And I think it may be this one here. Let me see if it assisted me to save it there. And maybe, yeah, it's here. So I kind of had copy pasted this here. So it's here. So this is the issue here. Remember, this one is actual. If I put the name here, this is actual. All these others are budgets. All these are budgets. All those are budgets. All these are budgets. From Q1 to the rest. I think I put this one here on the wrong side. This should be actual, should be here, actual for Q1. So why don't I just push this? Sorry, just a minute. I could push this to start here. So that is it. And then this is actual for Q1, actual for Q1. So that is the actual. So how do you do the rolling budget to get the 11 marks? So the idea is that there are factors which we change here. One of them is the growth volume, or the growth of volume growth, which is said to be that. But in the process, that's the only thing which is a changing factor. There are things which may change or not. Like they have said here, the cost of sales and the selling and the distribution are variable, except administrative is not. So we could take easily this. This is how we'll prepare our rolling budget. So I could easily do it on the side by side so that we see it immediately here. So we'll take what was the actual here. This is actually in Q1, which is of course in franc in thousands for that case. So we have it. So we have it here. We could just swiftly bring all the data here. And of course, it has the particulars. What are these particular figures here? We can call them the particulars of that case. So the particulars here, this one relates to revenue. This relates to the rest of those as it is for that case. So we have, this is calculated, of course, as you may notice, all these are calculated figures, which is that one here is calculated. Even this one here in the double lines here is calculated in the process. So those are calculated. So we need to now make budget. We need to make a rolling budget to run between full year of the other quarters. So this is a rolling budget. This is a rolling budget. So how do we do this? We start by now a budget for Q2. So we'll have a budget for Q2, then a budget for Q3, all the way to Q1, a full year. So it must present like a full year. Sometimes I find it irrelevant to do for that because it always changes, but that is how they kind of do it. Because if it is always changing, then my way of thinking sometimes, I don't know if it is a wrong way of thinking, but I always think that maybe they should do per quarter. But then of course—
Why don't you start by Q1 on lowering budget?
On? No, Q1 is already— Q1 is already actual, so it's already covered. We are budgeting is a planning, so our plan is future, and future means Q2 is the future. From definition,
it means that you have nothing to do with the Q1.
It's done. It's gone.
Thank you.
Q1 is already, because when you see here there is actual, it means Q1 is already, we are beyond that. It's like, can you make a budget for July? No, July is already gone, is it? You cannot make a budget for July, August, September. It's gone. You just use the data they gave you got from the actuals to project the next. So Q1 will be calculated, another one, but in another year. There is Q1. So for your question again, we of course we use the actual. Remember there are two factors called Q1. One is actual, another one is budgeted. So this one is under budget here. All this. So again, the Q1 we use actual to project. That's why they say rolling budget uses what has been realized and then adjust it to project the rest. So this is the projections of the next budgets for the next full circle of a year, which is quarter now. This is your account. This, there is that, which is 1, 2, 3, 4. Now, there are things which will change. Administrative here is fixed in nature, so it means it will not change, as it said here. Here, there's a line which says administrative fixed. Others are variables which they will change with the volume, the quantity. So the rest is just to develop the formula. I will insert the formula later on, but the formula is to factor in the growth. Before I send it, I'll insert the formulation later. But this is that you will have this and you subject it to growth. Now remember, 3% you have to check, is it per quarter? Because it's per year, you need to if it's per year, you need to, of course, to divide and proportion it to a quarter. But the good thing, this 3% is per quarter. So if I multiply, it is a per quarter, is changing per quarter. Cost of sale will go through the same. And from that basis, as you may know, the formula here would be, you have this minus that, which will give you that element there as we develop our first template of what to run to the rest, or our first element that will be repeated throughout. Then here, this of course will go through the growth issue, which will be multiplied 1 plus 0.3, which will be for that quarter, and that will be the case. Fixed will not be changed, and therefore, by the time you deal with that, you have this minus that minus all the operational cost, and you get it equals to that. So this has developed already. What will be repeated systematically throughout. So the rest is just repeat what this column has, and it becomes more like you're not even thinking as such. You're just simply factoring in calculations. So the calculations will just be factoring mechanically, as long as you make sure you are factoring in the changes which are related. So here it becomes more mechanical, which means the rest of the other issues will follow the pattern as such. Like the next, of course, will be like this, of course, again, subjected to the growth issues, and which is 1 plus, of course, the 0.03, and you factor in and you move on like that. Similarly, that will appeal to the rest of those others, which will be, of course, this here will be this figure here. This figure here will be multiplied, and you have 1 plus 0.03, and you close that, and you have it as such. So here, of course, others will be just calculated like that. Similarly to this, of course, it will be subjected to the growth, which is 1. That is the form of a rolling budget. So this is the rolling impact or factoring in the rolling issue. So you have all that, and you get that. Fixed will remain the same. In fact, this one we can easily post everywhere and forget about it, you know, or sorry, we can easily roll this everywhere or write it everywhere, and it will be there. So the rest, of course, also this will follow through that, and then you have all that. So here, the rest, of course, will change through the same pattern that it has been, which will be changing through that. And that will go all the way to the rest of the figures, which will be that. I think if you have a calculator, you can confirm that. The good thing, the bad thing is that they don't allow Excel, but Excel can do that, which can do it very quickly for that. So it means in the process, that is what it will be. This will also have the growth there. This will also have the growth from here. This will have the growth from the previous, and this will have the growth. So this is what it will be for the rolling, and you get your 11 marks, and you can explain rolling budget. Of course, its benefit, it captures and updates the budgets based on the changes that are likely to be realized, and that makes it more accurate, because or makes it more updated to the trends of the changes that are being realized at particular intervals. So that's how it is. Nothing much. As I say, that is one of the budgets which is quite easy to do, because all you need is to pick what are the factors. You start with the actual. This is actual. This is not a budget. So you start with the actual, and then you factor in the rest of those to give you a full cycle over here. So the full cycle over here is those 4 quarters. So what will happen next? Next is that you will use quarter 2 now, because it's a going concern. Eh? So quarter 2. Yes.
It is in question said that the sales volume growth is 3% per quarter.
Exactly.
And then even the cost of sales is also growing at that rate.
Yes.
That is not said anywhere.
It's a variable. There is something they said here. You see even here. Let's bring here. This, there is a line here. If you check that paragraph, it is here. even I could paste it here. It is saying that is a variable. And I think we have always said that variable cost is a cost that changes with the level of activity. And level of activity in business terms is usually what you are doing. And in this case is the volume. It is said here, they say is give the cost of sales, distribution, and distribution are a variable, except for the admin. Admin is fixed. And that's why admin here, if you check here, admin is the same throughout. But the rest are a variable. Of course, sales, you know the formula. Sales is never fixed. Sales is sales price multiplied by quantity. Cost of sales, since they say all of it is variable, then of course it means it changes with the quantity. It's okay?
Yeah, it's okay.
Question,
Okay,
sir.
okay.
Excuse me.
Yes.
Excuse me, sir.
Yes, please.
You see here on quarter one, you've told us that already passed. Why did we bring it back here and calculate 3% increase on it?
Why we calculate 3% increase on it?
Yes.
Okay, it's quite simple, that factor. This is the case. The budget is a planning. The budget is a planning tool. The budget is a plan or is a planned tool, is a planning tool. So therefore, it means it is a estimated, and estimates we use today's factors. So that's what they are using here. We are going to learn about we'll learn about estimation quantitative techniques, which is the high-low, the regression, the learning curve, the time series. All those are techniques in which we learn one way or another, whether we learn in quantitative methods, whether we learn it here again to repeat it. There are factors is that they are estimation tools, or they are used in cost estimation. So why are they using that? Because they use it because they update. They do a quarter and they find an actual, and then they use it to say, now this actual reflects already what is a reality. So what they do is only to add a certain projection that they believe will change, which in this case happens to be volume. That is the concept of rolling. Next month or next quarter, this will now be actual. Quarter two will come to be actual. So they will use quarter two to make another projection. Next quarter, they will use quarter three. Quarter three will come and pass. So they will use quarter three to make another projection. Next will be actual, will be this. They will use it to make projections. That's how it is.
Oh, yes, thank you.
Because the quarter will not remain, the actual will not remain on quarter one alone. It will switch based on, life is movement. So it's based on, time has to keep on going. So quarter one time will become the one which is actual. And then you use it to project the rest. So the latest actual is the one which is used to project the subsequent budgets plan or the subsequent issues. Okay?
Excuse me.
Yes, please.
Now, me, I have two questions. One, you mean we can't get actual in quarter one and budgeted in quarter one? Can't we be given that?
A budget is here, by the way. This is budget.
Yes,
budget
I see.
And we are given actual. So quarter one budget is here, and this was actual. And you could notice even there is variances. They are not the same. This is 8, this is something like that. So of course, they use the actual. They don't use the budget again. And the thing is that the actual has already manifested itself and tracked the changes that have been realized. So to keep on, the word continuous means they will have to update. And update means you use the latest information and in certain maybe some A, B, C, D, and there, and then you get the one you want to use tomorrow. So that's what they do. They take the latest update and then factor in some ABCD projection that they feel could happen, and then they get the next to be cycle of budget. So they use the latest. And the latest here is the latest actual, or the one given is the quarter one.
Okay. Now on the growth, what if they say that it's per year? In quarter two, we could have said that it is 1 or 2 over how we get months out of the year.
You know, if they say it's per year is be, you know, just the same way as we do in what is called multi-period factors, which is also covered in managerial and all those cases. Whenever there is that thing which is the figure given is 3%. Let's say let's say per year it is a much bigger percentage. Let's say it was like 18%. Of course, you'll divide, and if they want you to give your answer, it depends on also what is required. If they want the thing to be, but most times, okay, if they want it to be per 3 months, which is a quarter, then of course you'll divide by 12 to get what is an average, and then extend it to the 3 months by multiplying. So you'll get what this will give you. Then you of course extend it. I think this one is, I should have put equal here. So you'll do that. You'll use the concept of multi-period. You know, we always
each quarter.
The factor is that
you do it in each quarter.
Yes, you multiply by 3. So you do, this is the percentage. The percentage will be for each quarter. But commonly, quarter is the basis of any business to notice some or to track something. I don't think continuous can be done daily. It is very cumbersome. Daily you not see any change. So they use a quarter. A quarter is always within a year. A quarter is something that you look at the world the way it's developed. Quarter is always what we notice something. You may not notice something in 1 month, but you can notice something repeatedly in 1 quarter after 3 months, is it? That's why it is. Even semesters in universities were 3 months. In school, they are 3 months. All those 3 months. So 3 months becomes like it's the most idea. Also, like I would say by standard or by default, also a rolling budget could adapt to easily. Because as much as it is rolling, we don't mean that it is rolling every minute. That every minute you change, it can be very tiresome, is it? Unless you are using software. So, because changing also for every minute, you will not track any differences. Or changes cannot be realized in 1 second. Or if they are there, you want a series of repetition. And the series of repetition will be realized after several months. Yeah. Why not calculate? Somebody's asking me, why not calculate from the given budgeted data? As again, I said, continuous is about update. If you look at even the data here, we say is about updated throughout. And update here will mean they use by adding certain, which is the actual. If you use the budgeted, you will not get the updated, because another question will be, are you sure they have not used it here? We're not really, okay, I haven't tested it, but if you check, maybe they used already some growth somewhere else, and then the growth is now showing a different issue. Because if you check between these 2 quarters, there's a difference in between. Because you check like this is quarter 1 and quarter 2, if you minus, and then you get this is equal to that, that's the difference. If you divide by where originally it started from, you could pick this, you divide and find maybe what growth they were using. I'm just speculating. I haven't done that. I'm just testing. If you divide by where it started from, they were using a growth of maybe 2.5 on the sales. Somebody is talking. Okay, they were using a growth of maybe 2.5, like that. If you check between this and that. I don't know about cost of sales, But assuming I was to test the budget changes, I was to test between this and that. Let me test all and see. Let me use equal to, I bring this, I subtract this. I can calculate the growth on a quarterly basis and then divide by where I started from. This will give you that. Assuming I do test of all that, this will have growth of 0 because it will be the same. So you see, they were using different growth rates at certain point. So what I'm just trying to say is they use actual. Why they use actual? Because actual represents the already changes. Remember, rolling budget is its intention is to update. So actual has already the changes which were seen in Q1. As you may see, these and these are not the same. In fact, there's a difference between that. This is 89 and this is that. And even if you factor it in the percentages, you notice that difference if you divide by originally where it was, it is increased by around maybe some percentage, which you could factor in as such. So anyway, the idea is that they use actual. They use actual. Another question? So if there's no question, we need to talk about usually incremental budget and rolling budget are always, the difference is almost unnoticeable. So you have to know that. And it always brings a problem between its distinction or differentiating between the two. So as I'm talking about the good thing or the few questions I've seen on rolling budget are more theoretical, are more theoretical. Maybe there's one which was maybe, I don't know if there's one which is calculated way, but the idea is that the rolling budget and the incremental budget have almost a huge similarity, a very huge similarity that even as you check in the slide, even when they're testing a question, they always find it the tendency of asking what is the difference between this, because all of them have a factor of changing. All of them have a factor of changing, and that makes it quite interesting. Like incremental budget changes with certain issues. I think that is what it is that you may need to know. I was trying to check where it is. I don't know where I saved it, but I think it should be somewhere here. Yeah, why I don't see it. Anyway, let me go back here. Could use this. Okay, oh, it's here. Types of budget. It started here. So incremental budget, with traditional approach to budgeting, known as incremental budgeting, the budget for next financial year is based on actual results for the current financial year. At simplest, a budget based on an incremental costing approach is actual or budgeted performance of the current year. You see, they are using year. So it means the period is the main issue, adjusted for the growth and inflation. Incremental budget encourages slacks and wasteful because people may lie that there's growth and people may lie that there is this and that, and they insert in and they collect the money, or they insert in and the money is wasted. Maybe it is wasting. Maybe the increase is not because of inflation. Maybe the increase is because of certain issues. So they may be lying it is inflation, while in reality, it is not inflation. Maybe it is something somebody taking those goods home. So it has a loophole. And that's why they say here, it could lead to such issues, which could lead to slacks and wasteful spending. Now, unless there is anybody with a question there, mainly, as you may see, this is the main highlighted issue, which is of course that, and another issue is year-based, meaning is different from, is as a difference, the difference between rolling and incremental is the period. Now, in the question, they ask what is suitable about this. It captures if there is no stealing or wastefulness. It introduces, as compared to other budgets like fixed, it introduces the change of things that could change, which are like growth and inflation. So it has some advantages that could come across it. And one of the advantages, as I said, I'll kind of put the advantages which are there. So there are advantages which it has. You may see that is the case there. There is some advantages that it has, which could be always an important aspect of this. Those advantages may be one of the issues that somebody could use for that case. So any question on that before I go and show you a question?
Question, sir.
Yes.
Incremental budgeting and rolling budget. If someone read their definition or their meaning, they mean the same. What's really a key point of their difference?
Here again, if you come to the Excel, I have attached here the differences between the two. Here it is the difference between that. I wish I could maybe try to deal with this. I'll try to check that. But the difference, it could be kind of an issue which I could explain there. I've tried to explain it in Excel here, and maybe you could understand the case here. I've tried to explain which this Excel I'll share to explain that. Why? Because there's a question which asks the critical difference between that. Actually, it is a question which asked in 2022 or something, but I'll put the number here later. But this is what the detail is. But in conclusion, if I put it in a big issue, or if I zoom it in conclusion, the choice of incremental and rolling budget depends on organization need for adaptability, aligning with strategic goals and trade-off, simplicity, and the ability to correspond to dynamic market conditions. Rolling budgets are often favored in rapid changes, while incremental budget may be suitable for stable situations. So all of them, you are correct. They seem to be the same. Why? Because they change. The change is the main thing they adapt to or are inclining to. But rolling is for anything that is changing rapidly, frequently, meaning is a system of using is for short term, if I may use that name. So rolling budget is for short term. If something is changing rapidly, like in one quarter, there could be changes, then rolling budget is believed to be suitable for that. So what's the difference between these? Is that rolling budget is its changes are more adapted to more frequency within short intervals. While the other part, which is incremental, it is adapted to long-term changes. So the difference is that for this case, the incremental is for long-term changes, while rolling budget is for short-term changes. I hope I've answered your question. That's the worst one. Have I answered the question?
Yes, you did. You did, sir. Thank you.
So even I put here the differences. There is continuous update. This one is incremental update. So rolling off. I'll try to put in a. I'll try to put this in a table to show the differences, because like this is not really coming properly as I wanted. I'll put the difference between, like, I think in a table is better, where there is rolling here, there is incremental here, rolling here, incremental here, rolling here, incremental. I'll put all this in a table and maybe you can see and check it out. But The main difference is that for rolling is for short term. Incremental is for long term. That is the idea of whoever came up with this was trying to come up with that area. Now, for rolling, the questions that have been set about rolling, if you check, most of the questions that have been set about rolling have been merely, as I checked through, most of the questions have been merely about how it is in theoretical aspect, and a few questions, I think, if there is almost zero. But I think the way it is adapted, if there is rolling, you take what was previously, and then you factor in the changes, and you get, for incremental, sorry, you factor in the changes, and then you see how it is from that case. It is similar like rolling. The factors are similar. But when you are dealing with the incremental, you deal with it as you take what was the previous budget and subject it to the changes. And you take what was, they say you can use actual. If actual is not there, you can use budgeted. But actual is always better because actual gives a true data. And then you subject it to the changes, changing factor. Changing factor, this is changing factor that is there, and then you get what we call new value for the budgets, new value for next budgets. Now, for fixed, for next budget, or for future. Yeah. So I don't have anything to say. What I wanted to say was those are the two budgets. I've talked about incremental. I've talked about rolling. Now, for any issues relating to incremental, I'll share some notes. There's advantages of rolling. It is a suitable, especially if a budget has changes. It adapts to the changes and all those cases that relate to it. So that's what rolling can bring, incremental can bring. So all of them have all those cases. So that's what I could say about it. And it has advantages and disadvantages. Disadvantage, it can allow slacks, somebody to use it as a way of charging you or exploiting the budget and using it to make more money. As a saying, there is this which has grown, and in reality, there is no that. So it could lead to those wastages, and that is something you may factor in as a concern. Now, I don't have anything else, and I don't want to talk about the other two budgets, which is fixed. Actually, other three. There is fixed, because fixed, I need to talk about it while I do a question. And ABB, I need to talk about it while also I do a question for that. And zero-based, I've said, is more theoretical because it has no really formula. It starts from nowhere. So I'd wish to stop here. In the next class, for those of Msanze, I think we'll meet, maybe we have some makeup. I think, I don't know, Kigali, what they agreed, what it is. What did you agree?
We agreed to have another online class tomorrow.
Online class tomorrow.
Tomorrow, some of us have taxation.
But our lecturer used to record. If you miss, you can use record. It's for interest for completing. And we want tomorrow to continue online because those who will not manage to join us, they may use record so that we may be able to finish content. Yeah, otherwise, we are not going to finish.
Okay. Can you choose another? Can you choose another like? Oh, okay. This is the case, eh? Can you agree on another day?
Monday and Tuesday next week.
Yeah. Monday. Monday.
Yes, can make it on Monday.
Monday's
Monday
okay.
and Tuesday.
You don't have tax, eh?
Mm.
Okay. we can do Monday. We can do Monday and see. Let's do Monday, because I don't want some people of taxes to start to cry. I know how students behave. Some may not be happy. So, just yes.
If you have that group of Musans online, can't we join them?
Who?
Well, not online.
If you have those
Musanze
guys
is physical.
It's physical.
Musanze, they said they'll be off on Friday, so we can do it's physical, because also I can get some time on Friday, no problem.
Okay, so
it's a physical class. I think it's physical. It's not online.
When?
It is from Musanze. Musanze agreed it's Friday, so we have agreed that.
Okay. So for us to meet on Monday.
If Chigari wanted to join us, come in Musanze.
Okay.
I hear people want to travel to Musanze.
Let's do Monday. Monday online, no problem, is it? Okay.
Yes, Monday online, no problem.
Yes,
okay.
yes.
Monday we have another class.
No, Monday is okay.
If we have another class,
Monday,
no problem.
Monday we do have a corporate.
If you have a corporate, no problem. You will use recording.
No, recording is not appropriate.
My friend, if we don't do it,
Recording is not very appropriate. That's what I'm waiting for.
Let's do it tomorrow.
Than having a recording?
Recording is appropriate, my friend.
We can do it tomorrow. Tomorrow is okay, as we agreed in class.
Okay, let's discuss and then you let me know.
Okay.
Tomorrow there is that session.
You can discuss and then let me know.
What with it?
Discuss, you let me know. Okay.
Monday we have another class. Good night.
Okay.
Lecturer, remember to give the Kaplan one.